If you're looking for a trading strategy that will set you up for this year 2022, then you're in the right place. So in this video, I'm going to go over a strategy you can use for this year, and I'll show you everything you need to know about it. So as you could see, we're in USD JPY, and for this strategy, we are only going to be using two indicators. We are going to be using the high candlestick candlesticks, and we are going to use the moving average. So first off, we are going to start by adding the high candlestick candlestick. So for you to get the high candlestick candlestick, is only available on Tradingview. You can't get it on MetaTrader 4, you can't get it on CTrader. So if you've not yet signed up to Tradingview, check in the description of this video. You can actually create an account and everything. So what you have to do is that you have to go to the candlestick section and make sure you tap the candlestick. And these are actually different candlestick here, but the one we are going to be using is the high candlestick candlestick. You could see how it actually makes understanding the charts much more easier. So the high candlestick candlestick is mostly for those who cannot easily interpret the price movement. Let's take this for example. So you know there are actually two different types of trend, which is the uptrend and we have the downtrend. And last but not the least, either the market is moving sideways. And now what the high candlestick candlestick actually does for us is to find those points of retracement in the market. We don't just see price, shooting to the moon like that, and we don't just see price shooting downwards just like that. None of that happens. Price actually goes on a push phase and retraces. What the high candlestick actually does for us is to find those points of retracement in the market. So to know when price is actually in an uptrend with the high candlestick candlestick, you'll be seeing more of blue candles than the red candles. When you see more blue candles than the red candles, the high candlestick is actually telling you that price is in an uptrend. And whenever you see more red candles than blue candles, you have to know that price is in a downtrend. So let's go back to the chart so we can actually break this down. Okay, so looking at the charts right here, we could actually see a main color that is actually coming up in the market. We are actually seeing more of green candles here. We are seeing more of green candles. This is actually trying to tell us that price is actually going in an uptrend. And whenever you see this red candles, this is actually trying to tell you there's a retracement in the market. So whenever you see price actually showing more of green candles, it's actually trying to signify to you that price is actually in an uptrend. And whenever you see this red candle, it's actually trying to tell you that the market is in a retracement. So whenever you see retracement candle like this, it's either telling you to take your existing profits, or it's either telling you to not take a trade at that point. That is what it's trying to tell you at that point. So if we're to take a trade with the high candlestick candlestick, we have to notice whether we are seeing more of green candles or more of red candles to actually know the direction of the market. And whenever you know that, you should actually take your trades in direction of the market. For example, in this one, we are actually seeing more of bullish candles, and that means we have to take a buy. So let's say, for example, you can actually take your trade here. Then you can keep your stop loss right below this area here, right below here, and target to this area here. So immediately you see those red candles starting to form, you should actually close your trade, which is actually a huge amount of profit. You have to use the high candlestick candlestick in combination with the moving average, and the moving average actually makes everything much more easier to understand. So for you to add the moving average, you just have to go to your indicator section, and this is actually for those who are using Tradingview. So you just have to go to your indicator section. I already have the moving average as my favorite indicator, so I'll actually put that there on the charts. And you could actually see the default setting comes with 9, but we have to actually do some settings on this. So what you just have to do is to go to the settings, you have to go to the input, and this way you have to change this to the moving average you're going to be using here is the moving average 50. In my other videos I actually talk about the 20 and the moving average 25, which is actually good in knowing the direction of the market in terms of being quick in understanding what's actually happening in the market. But the 50 moving average is a whole lot different. So let's go back to the settings. Let's make the style, we have to make this to be white, and then we can actually increase the thickness of the moving average. So as you could see here, the moving average is together with the high candlestick candlestick. Okay, let me explain the moving average for you guys. So let's take this for example. This is the 50 moving average. So whenever you see price going above the 50 moving average, it's actually telling you that price is in an uptrend, and whenever you see price actually below the 50 moving average, it's actually telling you that price is in a downtrend. Remember, when I say the 20 and the 25 moving average, when price goes above the moving average, you should take a buy, and when price goes below the moving average, you take a sell. You notice I said something different here. I said whenever you see price above the 50, whenever you see price above the 50 moving average, it's actually telling you that price is in an uptrend. Not saying you should take a buy, but you can take a buy. Yes, you should take a buy. But I said in this one, know that price is in an uptrend, and whenever you see price below the 50 moving average, it's trying to tell you that price is in a downtrend. Now, there are other things the 50 moving average does apart from telling us that price is in an uptrend or price is in a downtrend. The 50 moving average actually acts as a support or a resistance in the market. So you could see here, price was actually at a retrace. Price was actually retracing. Mainly, price got to the 50 moving average area here. The 50 moving average had to push price up to continue in that uptrend. You could see that same thing right here, and you could see that same thing right here. You could see that same thing right here. You know, at the beginning of this, we said whenever you see more of green candles, you should know that price is in an uptrend, and whenever you see more of red candles, you should know that price is in a downtrend. Now, you don't need all of those things to actually work with. You just need the 50 moving average to tell you that price is actually above, telling you that price is in an uptrend, or you need the 50 moving average to tell you that price is below, which is telling you it's a downtrend. So if you want to know how to read the Japanese candlestick without using the high Kanashi, I'll actually recommend you to watch this video here, because I actually go in depth to explaining what the high Kanashi candlestick is all about. So I'll catch you guys in that video.